TonCoin is fascinating because even though the price didn't perform that well in the last year, the attention continues to be high. This is the most viewed cryptocurrency on CoinGecko in the last 24 hours. And the question is, can that attention turn into performance at one point? Let's have a look at the price drivers. Let's see who's buying, who's selling here. Let's see how high Ton could potentially go. So yeah, this is a CoinGecko overview of the most viewed cryptocurrencies. TonCoin is at number 1. And that's happening while the price fell by more than 52% in the last year. While at the same time, Bitcoin appreciated by 61%. Now this begs the question, why did TonCoin perform worse? There are several reasons. Reason number 1 is that the allocation towards investors and early supporters is very intransparent. We've seen all of those funding rounds, we've seen a lot of money flowing into the project, several millions of dollars. The money was raised from centralized exchanges and from market makers. But what are those market makers doing with the token? Nobody knows. What we do know, however, is the poor performance in the last year. Again, TonCoin did worse compared to Bitcoin. It lost 76%. But it wasn't always like this, right? This is a chart that starts in 2021. And while we do see lower lows over time, that doesn't mean that TonCoin is necessarily a bad altcoin. Because once we compare TonCoin's performance to all the altcoins, so now the market cap of others, that's the altcoins that are not in the top 10, Ton actually did do better from low to low. Bitcoin simply performed incredibly well recently, and that's because of all the inflows in the Bitcoin ETF and because of all the purchasing by Michael Saylor, etc. But within the altcoin market, TonCoin actually did comparatively well. Again, not in the last year, but in the grand scheme of things. And this is where the potential opportunity might lie. Because in the past, when we hit that bottom, TonCoin outperformed the rest of the altcoin market by more than 300%. And so, can we outperform to a similar degree yet again? I think this depends on the usage of the ecosystem. Because here's the thing, this is the total value locked of the Ton chain over time. And we saw a very nice growth up until July of 2024. That was also when the price peaked. Then things started to go south. Now this is in US dollars. And of course, when Ton itself is going down, the total value locked on chain is also going down. We can also look at this measured in Ton tokens. And the chart doesn't look that different. Again, our peak in July, and since then we rather tend to go down, but now we have stabilized, and this might be the opportunity again. If Ton doesn't see continued outflows anymore, and at the same time the team continues to innovate and brings out new applications, then that could attract again new capital, and that could lead to the next rally. It's all about risk to reward, and if the risk of additional capital flowing out is rather small, and the potential reward is a 4x or a 300% increase, then maybe there is a potential opportunity here, right? Because in the end, crypto is all about buying low and selling high. And obviously, when the price is low on an asset, there aren't too many people that are super stoked about it, right? Most people are super hyped and want to buy something when it's already high. Very few people want to buy something when it's low. But let's have a look at what's currently driving the price. Check this out. This is the perpetual futures market of Ton. So there were 70 million of trading volume on the spot market in the last 24 hours, but there was a bit more on the perpetual futures market, 81 million. It's not much more, but it's slightly more, so there is a bit of a driver here as well. We see there is some correlation between the spot price and open interest, and recently the short-term capital is getting more and more interested in the token. There's more and more open interest, so more bets on the price. The speculative money is betting on higher demand of Ton. The funding rate is also positive, so most of those perp traders are betting on rising prices. There aren't too many liquidations, they're rather small in magnitude, so overall this is quite consistent upward pressure for the Ton price. Now, can Ton long-term outperform Bitcoin over the next 2, 3, 4, 5 years? Nobody knows, but is it currently comparatively cheap? I do think so. At least it's relatively easy to set a stop loss, to not buy anymore as we drop further. and to potentially exit if suddenly money flows out of the blockchain again. But if that doesn't happen, if things actually have stabilized and some kind of positive news comes out, then those positive news could propel the price up quite a bit. Now, the vast majority of people in crypto approach the market in the wrong way. Most people try to find those multiple X returns. They try to find the few assets that make outsized win. But this is clearly a game against the odds. Most altcoins tend to go down massively. A 70% decline over here, another 80% over here. It's all double-digit losses. Now, the common counter argument is that maybe we don't just buy one or two altcoins, maybe we buy multiple and then we might get that high flyer as well. But the problem is that diversification, so spreading the risk across various assets, does not work with altcoins. Everybody can launch an altcoin. Everybody can increase the supply as they want. And so in aggregate, the altcoins tend to do worse compared to Bitcoin and Ethereum over the long term. What we've got over here is the others dominance. So how much of all of crypto is in the altcoins that are not in the top 10? And 3.5 years ago, this was still at 19%. Now it's below 8%. So had you invested in a broadly diversified basket of altcoins, you would have on average underperformed the market by 60%. Instead of trying to find the needle in the haystack and most likely lose, at least in the long term, isn't it better to try to get the odds in our favor? If most things don't perform that well compared to Bitcoin and Ethereum, if a lot of altcoins inflate in supply over time, so supply grows faster than the demand, then why don't we bet on relative valuations? It's a bit more complex of a game, but I believe that this added complexity does help. We want to make our investing as simple as possible, but not simpler than that. And so here I am doing something differently to most other YouTubers. Most crypto YouTubers, they just show one single win. They say, here, I made some money over there. Just trust me, bro. Very few are willing to share their trading history. Now, here's my trading history on Hyperliquid. This is where I started trading decentralized perpetual futures. This is the profit and loss. And the maximum drawdown was only 5.1%. Now, obviously, I'm not going to share my positions open here on YouTube. That's part of the premium membership. It's down below. It's thebitcoinstrategy.com. Now, the issue with trying to pick the winners is, of course, that we have a very low chance of succeeding. But the beauty of crypto is that it's still an incredibly inefficient market. People always say that capital markets are efficient, but in the end, it's the people that make it efficient. So if you know more than the average market participant, if you do more research than most people, if you're part of a group of people that do more research than the average market participant, then we can win. Then we are the people that make the market efficient, then we are the ones that make the profit. For example, this here. This is pure inefficiency. This chart shows the balancer token relative to Ethereum. A very constant underperformance. And we can make money from that underperformance. As the price is going down, we are printing money. Yes, we are betting on falling prices. And yes, this might be a bit more scary at first if you don't know what you're doing, if you haven't yet learned about this whole topic. But the risk is every now and then a potential short-term pump, again, when we bet on falling prices. But the reward is a very long-term constant trend. We can also turn this chart around. So this is now Ethereum relative to balancer. So basically buying this when we long one asset and short the other. So the inefficiencies are not necessarily that obvious in the macro, as in the market is expanding and contracting in a way that's not that predictable. But the relative valuations are much more predictable. The risk to reward in a chart like this is quite obvious, isn't it? People make all kinds of mistakes. People, for example, also just leave their stable coins in their wallet. Right? Let's say you trade actively, you've got some stable coins, and you don't use this for anything to add some additional return. That's also a mistake. For example, here we can get 15% APR by providing liquidity to Hyperliquid, the largest decentralized perpetual futures exchange. It's comparatively safe. It's definitely worth the risk for 15% APY. And so this is then the feedback that I get in the chats. It was the first nice trade. Thanks, Gerhard. And over here, a few more positive trades, etc. and people make their money back very quickly. Premium has already paid for itself. And yes, if you've only got a few $100s in crypto, this is probably not worth it. But if you're investing several thousands of dollars and you're still inefficient in your trading, if you still hope for your one altcoin to outperform, it probably makes sense to learn a bit more. And this is what I mean by learning. I've published more than 100 tutorial videos on various topics within crypto, on how to use relative valuation bets, on how to manage risk, on how to do on-chain analytics. Feel free to binge watch all of this. And of course, I'm also sharing my own trade. So for example, here is a trade opened on the 30th of April. And here's then how I closed this 5 days later. Yes, this is only a single example, but that's why I showed the overall portfolio chart before, right? This one over here. And so feel free to check it out. It's currently $125 per month. It used to be 165 when everybody was super hyped about crypto. Currently, the attention on crypto is rather low, and so the price is also lower. If you lock in that price now, you will not be affected by the price increase that might happen once the market picks up again. So everybody that signs up locks in their current rate. If it's your first time here, feel free to subscribe. I publish here regularly. Like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in Premium. There should be somewhere a card over here. You can just click on that and it will lead you directly to the sign up page. So see you over there as well. Cheers.